Welcome to Regulatory Ramblings. Our guests today are the authors of the new book, The War on Dirty Money. Nicholas Gilmour is a consultant to governments and international organizations in fighting crime. Tristram Hicks is a former New Scotland Yard detective superintendent and international criminal justice advisor on the operational effectiveness of anti-money laundering regimes. Wherever there's crime, not infrequently, there's often dirty money involved. And that's true if we're talking about corruption, graft, tax evasion, human trafficking, terrorist financing, or sanctions violations. Money laundering, therefore, goes hand in hand with dirty money because once you're in possession of it, you're going to launder it more than likely. You're not going to deposit it. Either dirty money or funds of the very least questionable provenance. So it's not a victimless crime, as such funds are often used to fund myriad criminal enterprises. And the authors of today's book argue that ultimately financial investigations must take center stage before there can be any meaningful criminal justice reform in the UK. So, gentlemen, thank you for joining us.
It's a pleasure to be here. Thank you for inviting us.
Yes, thank you.
Appreciate it. Conventional wisdom is that law enforcement needs to come up to speed as money launderers and financial criminals are becoming increasingly more sophisticated. I remember attending an ACAMS event some years ago where it was said that organizations like ACAMS, AFCS, ICA, and all the rest of them have done more to educate financial criminals and keep them ahead of the curve than anything else, because obviously it's not only legitimate people that are attending these events. So that is the perception that criminals are ahead of law enforcement, and it's often only once a particular new modality of money laundering has been used to the public's detriment that we learn about it. But you say in your book that the fiction of a sophisticated money launderer is a dangerous distraction. Why is that?
I first heard that money launderers were getting more sophisticated 25 years ago, and it's been used as an excuse for at least that long by law enforcement, who are saying, "Oh, this is just too hard to do."
Very much so.
And the issue is not really that. It's true that banking and financial instruments are becoming more sophisticated, but the main issue is that the law enforcement agencies aren't looking because it's not a priority for them.
Okay.
And they're not looking because they don't have the legal powers to do the looking, and they don't have the staff who are trained to do the looking because of those first 2 points.
Mm-hmm.
And the simple fact in much of the world is that you can still cross a border with a bag of cash and go and buy a house.
That's frequently the case in this, or up until recently, that was frequently the case in this town.
And law enforcement is not equipped to do that. Sometimes customs will record the fact that cash is being imported, and sometimes a suspicious transaction report is made.
Mm-hmm.
But if neither of those things happen, then the transaction just takes place. And we do say throughout the book, transactions are the key issue here. And we are not equipped to seize that cash. Sometimes at the border, it's seized. But once it's inland, most countries do not have a power to seize cash, let alone anything more sophisticated than that.
A key point that you stress is that money laundering isn't just a series of stages and modalities, because at the most basic level, there's either transaction or someone's purchasing something. At the end of the day, money laundering is simply about the transferal of value. And to that end, anything can be used.
Yeah, definitely. We try and pull apart the idea that money laundering is placement, layering, and integration. And we've come up with the idea that it's simply a series of purchases and transfers, and not necessarily many of them, sometimes lots of them, not necessarily always real. Some of them could be quite simply made up just to suit the eyes of people maybe watching over them. But money laundering is not that complicated, and like Tristram says, it's been sophisticated for the last 25 years. And we mention in the book, and there's a really good caption from Upton St. Clair, who was a candidate for the Californian governor in 1935, who clearly said, it's difficult to get a man to understand something when his salary depends upon him not understanding it. And we think with money laundering, we've overcomplicated something which is quite simple. It's the need for the criminal to distance the funds and the wealth from the initial crime. And the greater that distance between the two, perhaps the more sophisticated money laundering becomes. But are we falling into the need to now introduce technology to overcomplicate it because it's now over sophisticated? It's difficult to actually draw a line and say, enough's enough. Let's look at the problem. Let's try and understand it. And let's work out, is it getting more sophisticated? Or are we just assuming it's more sophisticated because we're not looking at it?
Something that I noticed you stressed is that, I mean, at the end of the day, it's all about transfers and purchases. That in essence, that's what money laundering is. And that even though technical solutions exist for launderers, that it's those transfers and purchases that need to be tracked and detected. And then we come back to the typology reports that come out from the Paris-based Financial Action Task Force. I think most of our viewers know that it's the body that sets the global norms for AML, KYC, CTF, and with its famed 40 plus recommendations. And to the best of my knowledge, I don't think there's any jurisdiction that completely follows all 40. Do the FATF's 40 plus recommendations, do they fall short? I mean, is it an antiquated body, or its recommendations something from an earlier time that aren't really relevant today? I mean, what are your thoughts on that?
Well, if you look at the Financial Action Task Force, actually next month, it's going to be 33 years since those initial 40 recommendations came out. So we're 33 years into a journey of trying to deal with a problem which we would expect over the years we've gained a lot of knowledge in.
Presumably.
Now, there's no discredit to FATF at all, because they were there at the beginning and they created something that is actually very credible. They delivered into over 200 countries a process to deal with a problem that is global. So we have over 200 countries dealing or accepting FATF's recommendations and dealing with that in a national perspective. So although the Financial Action Task Force receive a lot of criticism, actually the criticism they receive is an indication of their skills and ability to deliver. So there may be political negativity towards them, but actually it's a positive of FATF's actual global approach to the problem. Now, FATF have changed over the years their approach. We've had the 9 extra recommendations following the 9/11 incident, which were then incorporated back into the 40 recommendations. And for the last 10 years, we've had what we know has been the recommendations now, and the MER approach has basically been for the last 10 years their solid grounding to deal with money laundering globally. Now, setting that aside, as you question, has the Financial Action Task Force actually kept up to today's money laundering practices? Are they dealing with the severity of money laundering and the complicatedness of money laundering as we potentially see it? And perhaps no. Perhaps they're not dealing with it and as good as they possibly could. Perhaps they could start looking at it from a regional perspective rather than an individual country approach, because no country is alone in its war on dirty money. or in the battle against money laundering. Now, criminals know this, and criminals have abused transnational borders and jurisdiction differences for many years. But the Financial Action Task Force simply looks at a country alone, as opposed to its illicit financial flows with the regional countries. So we actually think that there's a good opportunity here for the Financial Action Task Force to not look at single countries alone, but to look in regional perspectives and see how those countries work together and their illicit financial flows are happening in the background. They understand how those countries have a various different types of risk, because regionally risk will change depending on criminal activities. And then it will allow the national risk assessments in those countries to be written so that they're very much relevant to the people inside who deal with the war on dirty money, or dealing with money laundering or terrorist financing. And it's about, I guess, not just taking that blanket approach, but actually homing it down into regional and specific areas. So there is an opportunity, but right from the beginning, we need to remember that the Financial Action Task Force have done a really good job in the scope that they've managed to succeed at.
Certainly, in terms of getting that level of wide scale adoption in those 33 years, yeah. I mean, I'm not disparaging that, but I mean, from ACAMS and others, you've seen multiple features written over the years questioning the efficacy of each of those 40 recommendations, and the fact that not all of them are suitable for all jurisdictions. I mean, I don't think there's any place on earth that abides by all 40. Regarding compliance, I mean, each day at the world's banking and financial institutions, they're overwhelmed with information, more than they can realistically handle. I mean, if you're a compliance officer, you can't leave until all the transactions for that day have been cleared. On a good day, that's sometime the early evening of that day. Not infrequently, and even for small banks in this town, that's late in the evening or in the wee hours the following morning. And you get back to the office in the following morning and do it all over again. Amongst the highest, compliance has amongst the highest turnover rates, and that's partly also because they're in demand. But there are frequent cases of burnout. And in terms of the rate of change within the rate of change, locally at least, I've noticed, but I understand from recruiters that the experience of Hong Kong is not atypical. The greatest amount of turnover within compliance is with the AML and financial crime people. So you factor that in. I mean, there's so much information coming at you. It's like aiming a fire hose in a teacup, and you reach a point of sensory overload. Is that an indication that now we're at a point, given the volume of transactions, that fintech and regtech solutions have to be used, that artificial intelligence and machine learning may be the answer, in that? Well, I'll leave it there.
Well, there's a couple of points there, and I think if you go back just to what you previously mentioned on the last question, typologies. Now, the Financial Action Task Force will put out on a regular basis typology reports. Those typology reports, by their very nature, will focus the mind of the reader in whatever position they're in into a small confined box. They will suddenly believe that that type of money laundering or that area of typology study is probably the most important at a particular time. And I've been in financial intelligence units and I've seen those reports come through, and the knee-jerk reaction is, well, this has just been released, this must be a problem. Now, when you've got over 200 jurisdictions dealing with a typology report, and already the 40 recommendations are not entirely applicable to them, neither is going to be the typology report, and all the other data that is coming their way, there is going to be that sensory overload. There is going to be that worry of, are we missing something because this is important? Whereas the money launderer is thinking, well, hang on a second. If the focus is over here, why don't I shift my business over here? And they react accordingly, because at the end of the day, banks are exceptionally good at risk assessments. They will do the best risk analysis on you as a customer than anybody else. But the money launderer, the person who has the responsibility or was the criminal who basically captured the illicit wealth and is holding it, actually needs to launder that money, and they're not going to throw it away. They're not going to make silly mistakes. So they will undertake a risk assessment. So if the focus is somewhere where the risk is low or great, they're going to go in the opposite direction. They're going to go for the place of lowest risk. So you're going to have compliance officers running around not knowing what to look at. And then if you have a manager who believes that something is critical because they've read a national risk assessment, and the national risk assessment unfortunately leads them astray, it's very confusing. And then of course you have typology reports assuming that there are different types of money laundering. But we don't necessarily have money launderers standing up and saying, my professional role is a trade-based money launderer. No, they're effectively just a money launderer. They might just use trade-based money laundering.
Correct.
Now, you have all that data. You have all that information. And all that information is being captured in various places. But nobody's trying to capture money laundering in its simplest form as transfers and purchases. So here, we're now seeing machine learning, artificial intelligence, and other technology solutions with fantastic marketing material being pushed at conferences, pushed on social media, pushed generally as wide as possible to anybody that has an AML compliance obligation as a solution. But are they really solutions? Because if you speak to some of these people and you ask them about money laundering, they will say to you, well, I don't really need to know much about money laundering because my job is to be a data scientist or to look at the data within this organization and to try and capture those red flags.
Precisely, yeah. That it seems to me, and this has been pointed out, that the volume of hiring in compliance in the years after the HSBC case in 2011 and the billion plus was it 1.5 billion or $2 billion fine that they incurred, that the amount of hiring you saw in the aftermath of that across the financial community was obscene, and it led bankers to ask, who are these people making not insubstantial amounts for what is essentially an oversight role?
Yes.
That degree of overstaffing, it seems to me, is leading people in the direction of AI, machine learning, and people have even said that it may well reach a point where you have a data scientist heading up your financial crime compliance team, and because it's all about discernment of patterns from troves of data, and that pretty soon that will matter more than necessarily substantive knowledge of money laundering and financial crime. And so what does that mean in practical terms? That you may well see more money laundering, junior money laundering reporting officers and some middle management, mid-tier analysts losing their jobs. But then what do we know about algorithms? Every algorithm works until it doesn't. And what do you do when one day that Iranian sanction case slips through the net, and then that's an awkward conversation to have with regulators, because they'll say to you, you went too far in the direction of cost cutting, you went too far in the direction of automation. Had you had more human eyes on hand, someone might have caught that. And what are your thoughts about that balance? Because the costs of compliance seem burdensome. Technology might be able to help, but technology itself is not a panacea. So I guess these conversations, these arguments can go on forever.
Oh, definitely. If you've got a data scientist who's following the simple information that's passed out to them, the generic information, we are never, ever going to get ahead. We are never going to win a war on dirty money. We are never going to basically catch up or even see a money launderer in the distance, because we are going to be following very generic information. Now, we argue that money laundering is simple, but actually the generic information that we're also given is not necessarily specific enough for us to understand how money laundering is happening today. We don't necessarily understand how those transfers and purchases are being facilitated within society. Now, if you've got a data scientist who doesn't understand money laundering, what's the point of AML compliance? Yes, you can add more people to it. Yes, you can take people away and you can rely on artificial intelligence. But if artificial intelligence is what we're relying on, then artificial intelligence is the walls and the roof of a foundation of machine learning. Now, if machine learning is our basis, where is that information coming from when it's kept in silos? It's historically out of date. You take machine learning to try and capture our behavior over the last 5 years. And 2 years ago, it went through a major reset because we had a thing called a global pandemic. And our behaviors changed considerably in how we spent our money and how we interacted and how we behaved. Yet there's points raised that actually, as the pandemic started, crimes went up, money laundering increased. And we're sort of in a position where there's now, for banks and financial institutions and other entities captured by anti-money laundering or compliance obligations, there's this fear of missing out, that if you don't adopt a technology solution, then you're not going to be able to keep up. But nobody ever questions what that little black box within the technology solution is actually capable of doing or is doing. We don't talk about the successes of technology other than within small marketing material and maybe a comment at a conference led by a sponsor. Technology is there, and technology has a really good opportunity to actually deal with the war on dirty money. But is it entirely focused at compliance, or could it actually be shifted across to enforcement?
Well put. I'm struck by something you said to someone earlier today on LinkedIn, where the young lady was commenting on how more needed to be done in the UAE to combat money laundering and terrorist financing. And of course, she was peddling her solution. And I mean, you question really what does your package, what does your solution do? And in that regard, there are myriad vendors at this point to choose from. I mean, I was formerly with Thomson Reuters, and as a journalist, and we were selling our wares too, into a heavily saturated market. To come back to your point about silos, I mean that is long been the problem with the 3 or 4 big banks in this town. That, I mean, financial criminals will not only try to use asymmetries in a particular jurisdiction to their advantage, but asymmetries within the same organization. In that, okay, certain branches are less likely to ask me 20 questions than other branches. And so, I won't name names as to the institutions because this is true of many large institutions, but you hear stories of siloed structures, turf wars, internecine warfare, people not collaborating, people not cooperating, people not sharing information. And against that backdrop, I can see how a criminal could leverage that to get their funds into a larger financial institution through one of their weaker organs or subsidiaries.
You look at the example of Commonwealth Bank of Australia.
Precisely.
For a period of time, it allowed people to deposit cash into their hole in the wall. Now, you would expect in today's society that as soon as deposits in such large, we're talking a lot of money here. I can't remember the actual figure, but it's astounding just how much money went into the bank through a hole in the wall. The bank allowed that to happen. Now, if we're basing our understanding of money laundering on typology reports, and we are incorporating solutions within our entities into these business entities that are all fighting for the same budget, shall we say, because it's not an endless pot of cash. There's a particular budget. We're sort of narrowing our ability to deal with money laundering into a corner. We're pushing it away. We're focusing on other areas, such as having a technology solution, having an idea that we are meeting the regulator's expectations. We are, and I hate saying this, ticking the boxes of AML compliance. Banks in themselves will accept that they will lose customers on a daily basis. Sometimes they will have more customers than a competitor. Sometimes they'll have less. But you and I, as clients of or as customers of these banks, we will move around typically for a better interest rate or a better opportunity. We may move to a different bank because we have different employment. We may move to a different bank because we move to a different country and it suits us. Yeah. Banks will lose people and they will manage it, but they are dealing with, as an entity, an obligation to meet their shareholders' requirements of a return. So the bank is focused on AML compliance in ticking the boxes. And I'm not going to say, I don't mean that in a wrong way. They're doing what they need to do in many cases. The obligations are there. They are ticking those boxes in many cases.
Correct.
But their focus is not necessarily entirely and honestly on stopping money laundering. They'll deal with fraud because typically fraud can affect them and their bottom line. But when it comes to money laundering, and many of these banks are found to be in breach of their money laundering obligations, their share price either stabilizes or goes up because the market is satisfied that those banks can hold their ground.
And money laundering, the transgressions for money laundering, the quote-unquote reputational loss and any fines they may incur are regarded as just another cost of doing business. So at this point, I don't think too many institutions are really concerned about reputational loss because all the major players have been hit in one way or another, in one jurisdiction or another.
And some have been hit several times.
Precisely.
So you could be, if you have integrity and you have ethics and you're a customer and you wish to have a bank, or you're a person who wishes to have a bank account, it may get to the point where you actually stand on the high street, if you can find a high street bank these days, but you're going to stand outside your big banking institutions and wonder which one to choose. Which one was fined the least amount for the least number of AML compliance failures? And let's remember, when there are AML compliance failures, the finger is never pointed that there's an actual true money laundering incident. We seem to wash over the idea that it was just an AML compliance failure, and we can provide a fine. We'll receive a fine, and the regulator dishes out a huge fine. I mean, these fines are increasing year on year. We're talking eye-watering what amounts of money being handed over here to a regulator who doesn't necessarily tell us exactly what's happening to that money when they receive it. But we never point the finger back at the bank and say, well, you had an AML compliance failure. It's quite significant because here's the fine that it attracted. So should we now step back inside your organization and see if we could find some money laundering? Is it possible that we also bring in law enforcement who says, actually, we'd be interested in finding out what was going on in here? because we have some criminal investigations we could start based on what we would find, but also it may be able to help us. But we never go looking for money laundering or terrorist financing. In fact, the regulator might even say in their report, in their public announcement, that we are not suggesting that this entity was facilitating money laundering. But we can't just keep dishing out fines, because fines are not having any effect on reputational damage anymore. It's just water off a duck's back.
Yes, they are rather numb to it, and so consequently, I'd say some of the worst cases are probably yet to come, given the volumes of cash we're talking about. And
can I just say, I actually think that the water is building up behind the dam. The idea that these solutions are protecting us, they are helping us meet our compliance obligations, to the point that actually the dam will break at some point, and that people will ask the questions of, why is there such a huge failure? Why have we allowed all these solutions to be incorporated when nobody ever asked any questions of, well, were they actually working? Did they actually do what they needed to do? Were they really solutions, or were they just facilitating more efficient compliance obligations, easier ticking of boxes? Because when that dam explodes, where will the solution people be? Where will the solution salesman be? Because at the end of the day, it should be the regulator who is getting washed away, because they've allowed this to be they've allowed these solutions to be incorporated. They never ask questions.
Well, two things come to mind. I mean, one, I've been, as I mentioned, I've been to trade shows, I've been to conferences, all kinds of people in the space peddling their wares, and they're all trying to get into each other's pockets. I mean, so they're trying to sell what they're there to sell, and I understand that. Something else that comes to mind that tells me that in certain cases, regulators can be pretty complicit. It's somewhat kind of related to this, but maybe not necessarily fully. And that is that I remember some years ago, there was an attorney in town who was formerly Chinese American fellow who used to be an assistant district attorney in the office of Robert Morgenthau, the longstanding district attorney of Manhattan. And the sense from what he described was that, yes, they were aware of a great deal of malfeasance, many of the shenanigans going on Wall Street. But it would be the case that they would let things carry on, and if it came to a point where the scandal was too big and they had to take action, or in that particular year the state's coffers were dwindling and they needed to replenish their cash, that's when they took action. I mean, and if even half the things I've heard were true, I mean, I can see at a high level how regulators and policymakers are complicit in this dance.
Yep,
I don't know if
I agree. It's not easy to it's not easy to break the cycle, but the cycle needs to break, because if you have regulators who are not asking questions about the solutions that are being taken on board by these large organizations to deal with AML compliance obligations, I mean, we're not even questioning, are they truly solutions? You look at the marketing material, and the solutions are very much about fighting financial crime, stopping and preventing money laundering. Now, really? Because you could argue that actually the 40 recommendations and AML compliance, as it's in national legislation, is not necessarily stopping money laundering as it's happening today, because it very much becomes quite generic. You're trying to capture many entities in your AML legislation. Yes, you're giving specific obligations to some types of business and professionals. But actually, the regulator seems to take a very much a back seat in this, and is quite happy to fine potentially the low-hanging fruit, the more susceptible businesses, maybe the businesses with the greatest amount of risk based on a FATF typology, based on a link to terrorist financing if we've had a terrorist incident.
Right.
And it very much works in waves of attention. And if you're unlucky and you're in the wrong place at the wrong time, the regulators go in toe-to-toe with you. And if you can't put up a good fight, and in many cases you won't be able to give a good fight because you won't actually understand the solution that you've taken on board. You will have believed what you were sold as being the solution.
Well, to be fair, sometimes being pugnacious with the regulator is counterproductive. You'll notice the American banks or some of the German banks, when they ran afoul of the US regulators, that they were pretty conciliatory. BNP Paribas said, no, we're ready to fight. And they paid the price because they brought the down on them.
But would you defend your corner if you knew you were right? No, and I don't think
if I knew I was right, and that the nature of the transaction, how can I put it? There are times when things go awry, and some things you just can't envisage, because every organization is going to have a rogue individual, and you can't keep tabs on everyone, given the colossal scale of some of these banks.
Yeah.
So if I knew we were genuinely talking about a few bad apples, I'd probably be inclined to fight. But if it was something systemic, and I had a sense the regulators could prove it, then that would be on us, or that would be on my institution.
But we want, do we not, people to stand up and fight? Because by being able to fight and feel that they're in a position to fight and stand up against the regulator, they have met their AML compliance obligations. And perhaps they've done a little bit more. They've stepped back and said, we have a social corporate responsibility to stop these horrendous crimes. Now, we can't go out and start knocking through doors like law enforcement. We can't start arresting people, but we can understand that criminality creates a financial contribution to society of illicit money, of dirty money. And we don't want that dirty money within our banking system or within our law firm or an accountancy firm. We're going to do as much as we possibly can. We're going to go one step further, 2 steps further, and we're going to be in the strongest position so that actually when it does happen, and when we are confronted by the regulator, we can honestly say we have met the AML compliance obligations, and we've done this, and we've adopted a technology solution, and we understand it, and it's doing what it says it will, and we can prove that to you.
Yeah, that's if you've done your utmost. I mean, it almost brings up the UK Bribery Act, where if you've done everything you could, there is a best efforts defense. Not so the US FCPA people may be surprised to learn. But I mean, if you look at how many of these cases end, they pay the fine, and there's no admission of wrongdoing.
And nobody goes to prison.
The regulator wants to move on with it as quickly as possible.
And there's no change in behaviour.
Yeah.
I do think we're reaching a crossroads in this fight against dirty money, because we are reaching the stage where the fines are just the cost of doing business. The behaviour doesn't change. The regulator is merely using the fine income in order to support themselves and to produce some big numbers which seem to justify what they're doing. But actually, we are following a compliance route which doesn't seem to be changing what happens with money laundering. I don't think we can go on like this, to be honest, which is why we've written a book of solutions.
And something that leaps out at me is that how you point out that there are gaps in AML processes, and the two lingering problems remain, namely that there's a difference in funding between prevention and enforcement, and again, the lack of international cooperation. So if we take those two in turn, what do you see the long-term macro level consequences of those two obstacles?
Okay, so the difference in resourcing in the prevention side and the enforcement side. Prevention costs around about $210 billion a year, according to LexisNexis, and the amount is rising. The amount spent on enforcement has not been calculated by anybody because there's not enough to calculate, but it's a number that's really, really small. And the result of that is two things. One is that the compliance side is judged by how well the asset recovery is going, how much confiscation is taking place.
Right.
And whether we like it or not, that is the metric that we use to look at the money laundering industry. And we're just not confiscating enough. And the compliance industry isn't getting justice from the enforcement side. And people looking at the money laundering system wonder whether all this form filling by elderly relatives in order to get a bank account, is any of this worth it? Are these fines worth it? Are they doing anything? And that's one of the results of that imbalance in resourcing. Another aspect is that the suspicious reports generated by compliance get to as far as the financial intelligence unit, but often don't get beyond that. So they don't actually reach the few people in law enforcement who are available to do the actual investigation and prosecuting and confiscation. And remember, the FIUs don't do that. They don't do the confiscation side of things at all. And the result of not having enough people on enforcement is that there is not enough international cooperation, which is an ironic. If there were more cases, there would be more international cooperation, but because there aren't enough cases, there isn't enough cooperation. So for many people in enforcement and prosecution, their request to cross an international border is the first time they've ever done it. So they're inexperienced, and the communication and the cooperation doesn't work for that reason.
Could we attribute the lack of international cooperation? I mean, let's call it spade a spade. There are places in this world that function off of dirty money. Hong Kong, Macau, Dubai, some would add New York and London to that list. There are entrenched interests that want to keep those spigots flowing, that they want the hot cash from all over the world, to say nothing of the cost price distortions it creates in the domestic economy for people that live there. And that the gravitational pull of that is just too great. I mean, I remember during David Cameron's last year in office, I mean, he was lecturing the Europeans about tax evasion and tax havens when not a word, not a peep about the crown-dependent overseas territories and what they were up to. And even with the Panama Papers, that was about tax evasion. It was about money laundering. But you had people commentators in New York and London, with a healthy sense of chauvinism, saying, "Oh, those Panamanians, those Latin Americans, they're just like that." When in actual fact, we know that there are law firms, there are British law firms often referred to as the overseas Magic Circle firms, Bedell & Co., Applebee's, firms like that, that were engaged in precisely the same businesses as Mossack Fonseca. And I guess what I'm wondering is, are the business interests too compelling to prevent international cooperation? Because oftentimes nation states are competing with each other to attract those funds, even if they're illicit.
Yes. I mean, this is a complicated area, but to try and simplify it, I do think there's an issue of competition between international corporates and the nation state. And the international corporates have tried to create a narrative where nation states compete with each other. And I think we are in that area at the moment. But nation states could unilaterally make some choices. Nation states do possess some vital tools that can look after their own interests in the face of corporate misbehavior and exploitation. And nation states have criminal justice enforcement resources, and they have their own laws, and they typically have their own currencies. But they're choosing not to use those tools. And part of what we're saying to rebalance the world in our book to fight against the harms against money laundering is that nation states should use their criminal justice powers and should use their enforcement powers in order to rebalance an unbalanced and rather lawless world. That's part of what we are saying. And we think it makes economic sense for nation states. If you employ more financial investigators, if you employ an extra tax inspector, then they always generate more money for the nation state than they cost. So it makes sense to do it.
I'd like to come back to a point about technology. In your book, you state that the level of computerization you see in the financial world and in the last couple of decades has not been mirrored in terms of law enforcement. Yet, where the line between law enforcement and the intelligence services is not always clear cut. I mean, I think GCHQ did help, in terms of the investigation to the London bombers, if I'm not mistaken. I mean, I guess what I'm wondering is, if law enforcement doesn't necessarily have those technical resources, can they draw on the resources of the intelligence services to aid them? Or is it just a matter of funding?
No, it's a great question. I think what we're trying to say is that the technology available to routine law enforcement is nothing like what it should be. At the upper end, where I was working, the technology is pretty good. The intelligence databases are good. The skill set of the cyber team that I led in Scotland Yard, these are really talented people with the best tools available, but they're just tiny numbers. What I'm suggesting is that the suspicious report database, this enormous 34 million SARs generated each year, could be matched by an equal number of data sets about crimes and criminals, but that data set isn't computerized in a lot of countries. So you've got technical tools at the upper end in places like Scotland Yard and the FBI. Places like that have got the technical tools, but elsewhere in law enforcement, where those SARs could really match criminality at a regional and local level, that technology is not available in law enforcement, not really used, and we don't merge those two data sets. Consequently, we're not able to give feedback to the financial sector, and therefore we don't improve the quality of the SARs. there's a vicious circle of SARS being generated on the basis of typologies and red flags and some vague ideas, actually. Whereas if they had some more precise feedback given to them by law enforcement, because the matches are being made by law enforcement and the feedback is being fed back, then we would improve the quality of the whole system. But because we are dealing with a massive information, a massive resource on the prevention side and feeding it into a tiny pigeonhole in the law enforcement side, we're simply not getting the justice, firstly for the whole system, but also for the populations. You know, the harms caused by money laundering and predicate crimes are not being addressed because of this imbalance.
No, that's a fair point. And then we look to international bodies like the UN, Interpol, the FATF. You suggest that they need to enhance, they need to augment their abilities. What can they do beyond what they're already doing? I mean, are we expecting them to do what's either perhaps beyond their remit and perhaps even beyond their abilities?
So the FATF needs to do more about operational effectiveness, which was a change in their methodology in 2012 that kind of, I hoped, would take over the compliance side of things, because the move towards operational effectiveness was about the logic of compliance to regulations fighting against money laundering, but it wasn't producing operational effectiveness, and that's why they changed their methodology to evaluate that, and they should do more focus on that. As Nick was saying, we evaluate countries, but we don't evaluate the flows between countries, so they could look at evaluating that side of things in a more effective way. The United Nations gave us a definition of money laundering in the beginning, way back in the 1980s, but it allowed individual countries to rewrite that definition into their own criminal code. So we've ended up with 200 definitions of money laundering. Well, the UN could take that back and say, actually, when we told you about money laundering back in 1989 with the Narcotics Convention, what we meant was this, and can you please use the exact words? Because the problem is that France and Germany, for example, have two different definitions of money laundering. As soon as a lawyer looks at the individual words, they translate them in a different way.
And
if one definition, we could all cooperate on money laundering, and then we could add the predicate crime to whatever case we're talking about. And Interpol has a section on its website. It lists all its predicate crimes, and then there's an extra one called money laundering. Well, actually, the whole point of money laundering is it is integral to all those other crimes. And we're treating it as a separate crime, listing it separately, resourcing it separately, when actually it needs to be a thread that runs through the fight against all crime. So there's a logic gap in Interpol, and the UN could change its definition. The FATF could look at it in a different way. These aren't resource issues. These are understanding the problem issues. And that's why we've written a book of solutions to say, if you look at this a different way, then actually things would be easier.
No, that's a fair point. You also mentioned that globally, everyone convicted in criminal courts keeps the proceeds of their crimes. I mean, we're, I guess different jurisdictions do different levels of jobs when it comes to confiscating the proceeds of crime. But I mean, that puzzled me and a few other people that read that. But I mean, I think you also point out that it's not just the dirty money that they have lying around or in their accounts, but it's all the other things they've accumulated with those ill-gotten gains that in some cases may be in other jurisdictions that are hard to reach, or maybe in the name of someone else.
Yeah. Well, it's not everybody who's convicted who keeps all the money. It's only in 80% of jurisdictions where they keep all the money of which they were convicted, which is as bad as it sounds. And understanding why that is something I bring to this story, really, because prior to the Proceeds of Crime Act in the United Kingdom, I was a senior cop dealing with organised crime, allowing criminals that I was dealing with to keep all the money, because I didn't have financial investigators. I didn't have a power of cash seizure. I didn't have the powers in the Proceeds of Crime Act, so I couldn't do anything about it. And also, I didn't think about it.
Yeah, now people feel the pendulum has swung too far in the other direction.
No, well, I wouldn't say that. No, I think we should be giving those powers in the Proceeds of Crime Act to the rest of the world. It's a brilliant piece of legislation tested in the courts for its human rights compliance. And those powers would be really useful if the rest of the world had them.
But you will have civil libertarians making the argument that it's encroachment on defendants' rights. I'm just putting that out there.
I'm in favour of that. I'm in favour of it being tested in the courts. I'm in favour of human rights and justice should be delivered. I really am. But I think the Proceeds of Crime Act does do that.
The other thing that struck me is, and you do a good job pointing this out, that when it comes to proceeds and instrumentalities of crime, they're not the same. Yeah,
they're not the same.
The FATF doesn't distinguish between them, and clearly, confiscation is a key deterrent to criminals. But again, that does seem to be a gaping hole in the criminal justice system. So, yeah. You also point out that when, and this is the thing that many people should pay attention to, that when corporations commit crimes, in a sense, they have a double indemnity, because when they commit crimes which are investigated by law enforcement, the authorities have to discern if the entity one did the crime, and then who it was within the organization that had the controlling mind. Could you elaborate on that? Because, I mean, clearly the higher up you go in an organization, the more diffuse responsibility and liability seem to be, because oftentimes you only get the underlings. You get the small fish. The people at the top are savvy enough not to leave a paper trail.
Well, they're not accountable. It's not necessarily about being savvy. It's not being clever. It's just that they've muddied the waters sufficiently so we can't identify who the controlling mind was for any particular decision. And this is called the identification principle in law, which was recently looked at by the Law Commission in the United Kingdom, who decided that the case was not there to change the identification principle. And they made that decision again in 2010. I challenged that decision. I think the case is increasingly that we should be looking at corporations committing crime. This isn't regulatory breaches. This is proper crime. And people should be held to account. And I don't think the public purse should be required to find out who the controlling mind was. Let's just convict the company, confiscate some assets, and the company can work out for itself where it went wrong at its own expense.
And you believe it or not, you've got free market types that are actually adopting your position because they say it's more efficient that way. So
I don't have a monopoly on good ideas.
There's a sense that, multinational corporations are less concerned about local impact, in that, okay, we're a big Western corporation, or we're from an OECD developed country, and we're one of the respectable nations on earth. So long as we don't misbehave within our own home jurisdiction, we're fine. We're allowed a great deal of latitude in foreign lands. So Singaporean companies, very well behaved at home, because the stick is quite hard and sharp, and so they know best to behave themselves. But when they go overseas, when they open up subsidiaries and plants and factories in parts of Southeast Asia, it's been said that that's where they go wild. And you see a similar tendency amongst Western multinationals, that there's less of a concern for how they behave in that particular locale. I'd like to turn to the strong case you make for asset recovery, saying that it's as important as incarceration for the prevention of crime, and that should financial investigations be combined with criminal investigations, as the FATF also says parallel investigations need to be done. What are your thoughts? I mean, would it not be more efficient to do them in tandem?
It would be, and the FATF recommends parallel investigation. And at a practical level, that's what really works. And even in cases of fraud, for example, if an investigator is looking at documents to prove a fraud, you would think that they could look at the same documents and look at the asset recovery at the same time, because the asset's going to be in the same documents, if you like. But actually, it really doesn't work because of the difference in objectives. So you actually need to have a financial investigator looking for the assets and a criminal investigator to look for the crime, even if they're looking at the same documents, if it's a fraud crime, for example, at a practical level. The issue that we promote is that those objectives, to solve the crime and to confiscate the assets, should be equal. And because criminal justice tends to be quite conservative, they tend to do what they've always done. So for them, financial investigation and confiscation is comparatively new. It's only a couple of decades old, and in criminal justice terms, that's pretty, that's a small amount of time. Bear in mind that criminal cases take 5 years, so the rate of change is driven by the results of criminal cases. So a decade actually is a short time for criminal justice. But we say those should be equal. The FATF says they should be equal. I think there is a case for the international bodies to promote confiscation and asset recovery to a higher level. And actually the money goes back into the the public purse, or it goes back to the victims of crime. So it is something we should pay a lot more attention to.
One gets the impression that the authorities, law enforcement, regulators, they're not as skilled at asset recovery. And so consequently, the victims end up having to go to people in the private sector, your Krolls, your Protivities, your Duff and Phelps, Navigant, FTI, Hill and Associates, firms like that, to do precisely that asset recovery. Would the solution be to hire more people from those firms and get them to come to the public sector?
Well, I think people who can afford to recover assets and pay for companies the rate that's required to recover assets is a gift only available to the wealthiest people. And really, there's an issue of justice for everybody else. The public purse should be protecting the population, and that includes asset recovery and the reuse of confiscated assets, as they do in Italy and countries in southeastern Europe, where buildings are taken from criminals and then reused as community centres or reused as cooperative farms. This is an issue of justice and morality that would make the world a better place. As for skills, the people who work in those private sector companies typically come from law enforcement, so they get trained by the public purse and then get used in the private sector. I'm not saying that's wrong, but the public sector could do the same thing for the public benefit.
Well, they figure I put in my 10, 15, 20 years, and I'm still middle-aged, and I've got a life to live, and I want to. This is, I mean, the latter half of my productive years is my turn to rake it in and capitalize on the experience I've gained. But yeah, I mean, there are firms that are doing very well in this regard, and they are incredibly cost prohibitive. I mean, I remember Kroll for a number of years in this town would write up a proposal, and as you know, identifying the problem is oftentimes more than half the battle.
Yeah.
And people would take that proposal that Kroll had written, identifying what the problem was for the client, and then the clients would take that around, shop around town, and say, okay, Kroll's charging me this much. Are you willing to do it for less? And eventually they'd find someone who would. And it's gotten to the point where I think Kroll wised up, and they realized they had to start charging for the initial assessments.
Yeah.
And it's to the point where I think Hill and Associates, I'm sorry, FTI will merely consider your problem and draft that initial assessment. They'll charge you $20,000.
Yeah. And it does seem to me, at a basic level, if you're the victim of a crime,
yeah,
you ought to be able to go to the police and say, can you sort out these criminals? Really? How hard is that? Particularly if from a national state point of view, the state could actually make money for the benefit of the victims and other victims and the state itself. This is a no-brainer, really. Why don't nation states do it?
Well, let's be honest, oftentimes the cops are learning on the job. I mean, if it's something of first impression, I mean, yeah, it's a valuable experience, but you know, it seems like for some of the cutting edge stuff that they're being exposed to it for the first time, and you know, the perpetrators are long gone. The damage is done. But you know, coming back to compliance, because the value of compliance, it seems to me, is not always recognized within banks. That, you know, people value their tax units because they can show how much money they've saved you. Compliance is required because the state mandates you to have it. But in terms of how much money they may have saved you, that's speculative. So you note that AML compliance is a huge industry, but it's not promoting its own successes because there are not too many AML compliance successes, if I read that correctly. And if so, some have suggested, again, maybe it would be best to automate more and, you know, go in that direction. But again, there's no substitute, in my view, for a seasoned veteran human analyst whose instincts tell them something's not quite right, even if it may have slipped past an algorithm. What are your thoughts about the AML compliance profession? I mean, does it have a lot to answer for, or aren't they doing a good enough job of marketing themselves? I mean, clearly they're not going away anytime soon. People are still hiring in this space, but whether or not they'll be hiring in the numbers they were in years past, I don't know.
I'll hand this over to Nick. I'll just say one observation about automation. If you're using automation to do the wrong thing, you just do the wrong thing quicker than you did before, but you're still doing the wrong thing. So, Nick, I think this is one for you, really.
Yeah, I mean, that's an interesting joke that you actually suggest there, because it's quite scary that's where we're going. We're heading towards that direction, and we're heading on a really fast manner. It's terrible to think how fast we are going, doing the wrong thing a lot faster. If you look at the compliance industry, yes, they have recruited thousands over the years, whether it be a knee-jerk reaction to regulatory fines or regulatory misbehaviours being captured by the regulator, or whether it just be a knee-jerk reaction to something else. The idea of having more and more people doesn't necessarily mean that the job is being done any better. If you're recruiting the wrong people, and we're recruiting just people for the sake of it, at the end of the day, what's the point? It's a double cost, really, because if experience shows us anything, actually, majority of high street banks have been caught at least once, some many times, and yet in between being caught twice to the second time, they went and recruited more people. So it cost them even more to get fined again. It seems like we're not winning. Either they're not recruiting the right people, or their whole attitude towards AML compliance is off course. I mean, there's some really good compliance people out there, but as Tristram said, if that disconnect is not addressed, and we don't feed back to these compliance people the results of these investigations so that they can better do their job, then we're expecting them to save the world. The organisations using them to do something, knowing that at the end of the day, the organisation is likely to be in trouble with the regulator. But maybe it looks good on paper that they have an extra 3,000 compliance personnel.
I think that sense of do somethingism, that, I mean, certainly for HSBC, show me that you're trying. One got a very palpable sense of that in terms of their dealings with the US government. That show me that you're trying. Show me that you're taking drastic action. And at one point, you had 200 general counsel at HSBC's main branch here in Central District, and they weren't all functioning as GCs. That many of them were in compliance. But I can't feel as though a big part of that was the mandate from governments in the aftermath of prosecutions and fines that I expect you to have a well-staffed compliance team to anticipate with and deal with such issues should they arise in future. And so it seems to me it's driven more by fear than anything. And then that cuts into their bottom line, and the net result is rage amongst shareholders, depositors, and the execs higher in the bank.
But doesn't that raise the question of why would a government expect them to do something as a result of their misbehaviour, but not guide them into what it expects them to do?
Precisely. And that is exactly what the compliance officers I spoke to in Chicago right after 9/11, when I did my dissertation on the Patriot Act, said to me that the federal government will tell you what constitutes bad compliance in a hurry. They'll come down on you like a ton of bricks. They won't tell you what constitutes good compliance. And I mean, I think we can agree a lot of this is the emotions of the moment. It's heavily politically driven. The public are clamoring for things to be done. And policymakers and regulators feel obliged to respond.
There's probably 2 points there. Why do you need to be told what good compliance is if you meet the compliance obligations? I mean, it's easy to tell you, we can catch people speeding,
right,
who are driving in excess of the speed, but we don't need to tell everybody you've done really well when you've not sped, you've not exceeded the speed limit. Now, if you're meeting your compliance obligations for AML compliance, then you're doing the right thing. That is good behavior. And I feel like we're in a really difficult situation because we have a compliance regime that is not necessarily fit for purpose for everybody. and he's not necessarily dealing with the problem of money laundering, in that it's putting pressure on organizations and professionals to deal with particular areas of their business, or introduce activities like the 80-year-old lady who needs to fill out huge amounts of forms to open a bank account.
Yeah.
Now, those rules might be fine, and they might be needed, because if it's a grandma of a money launderer, she's likely to get used. It's typical. Great modus operandi to use the grandma who's never been in trouble before to launder money.
And we've had cases like that in this town where the judges have said, you're clearly not the brains behind this scheme.
Yes.
But you should have known better, and ignorance of the law is no defense. And what you see in those cases often is, the FIU in Hong Kong. I mean, they took the SA. The banks did their duties. They filled out their STRs. The JFIU collected them, but the fault was on the part of the JFIU the authorities for not connecting the dots in time. And so these cases go on, and it's only when they reach a certain critical mass, when billions get laundered, where it gets too glaring to ignore, and when you embarrass Hong Kong in the eyes of the international community, i.e., the West, that they feel compelled to take action. And again, the judges have said, you're not the brains behind this, but you should have known better. Ignorance of the law is no defense, because otherwise it'd be used as a defense in every case.
Yep, I wouldn't say there's a complete despair from Tristram and I, because the book is written by people who see an opportunity to win a war on dirty money.
Oh, you're much of the head of Global Financial Integrity released his book a month or so back, and certainly your book is far more positive in your outlook about thwarting illicit funds than his was.
Yeah, well, and I think that was needed, because, like you said, you have despair amongst compliance professionals who are overloaded with lots of information. We have despair from law enforcement, as Tristram has said, who don't have the technology, who are very much working in minute silos on extremely small budgets. So the book was to try and pull all of those areas together, and to try and help those who are in the war on dirty money, and we're talking hundreds of thousands of people, with some solutions that that are cost effective and easy to implement, that would make a significant difference to their approach, both nationally, locally, regionally, but collectively, globally. Because if after 33 years or 40 years or 25 years, whichever point you want to count from, we are where we are now with all the problems we still have, do we not need to refocus the telescope and see a better view? Do we not need to make some changes and head into a different direction? Do we not need to step back and actually say to ourselves, are we doing the right thing? Do we understand what we're doing? Do we need these solutions? Are they really solutions? Do we need all these people? And if we do, what do we need them to do? Because we can't continue on this journey we're on, because we're just never going to get to a desired place.
I think the body count, I mean, the people are needed. It's a matter of deploying them the right way.
That's great.
Yeah. The expense of compliance is something that you hear many institutions bemoan, but I don't see any way around it. In the time we've got left, is there anything either of you would like to raise that you don't feel we've we've discussed fully.
Yeah, just one thing I would mention.
Sure.
We're just talking about despair, and in the United Kingdom, when the Proceeds of Crime Act came in, we suddenly had the ability to deal with criminals in a different way, and started to confiscate assets in a way we had never done before. And the amount that we recovered in the first 18 months of the Act was double what it had been before. And then that amount doubled every 18 months. And we went from 100 million to 1.2 billion when you compare the before and after. So we were at least 1,200% better. And that wasn't evenly matched across the UK. In some areas, it was 20 times better, 25 times better. So we did have success in dealing with the number of people and the amount recovered. And that had at the same time, crime was falling in the UK. And I say those two things are connected. And even if they weren't, we're still creating a huge impact on the criminal economy and criminals themselves and their associates. So that success happened in the UK, but we don't even recognize it in the UK, and we don't recognize success in other parts of the world. So another thing that the international bodies could do, the UN, the FATF, and the Interpol, is to recognize success where it's taking place and celebrate that success to the rest of the world. And there's not enough recognition of when countries like Kenya recently and Spain recently have been successful. There's not enough recognition of that good practice that should be promulgated around the world. So we should end this on a high note, because I think there is reason for optimism. And we've written a book of solutions to help people find ways in their part of the battle to gain some victory.
Yeah, I think there is some cause for optimism. I mean, a half decade ago, when I was presenting on the Panama Papers in Malaysia, and the Tax Justice Network advocated a global registry under the aegis of the UN for beneficial ownership. But again, that runs up against nation states wanting to attract funds. At that time, it seems like it wasn't going to happen. Now, I think it's more likely, because there is a growing recognition that some things can't be left to chance. Some things can't be. There are times where the discretion is quite literally killing a lot of people, because this is not a victimless crime. And if you, same with intellectual property violations, you would be shocked to see where many of those illicit monies are ending up, and what criminal enterprises. Well, Tristram, you know better than most what criminal enterprises those quote unquote businesses, those revenue streams are financing. Nicholas, anything you want to
add? Just to say that the book is designed very much to give a voice to the people who have not necessarily had a voice, because we want these people to be heard. There's a lot of information, a lot of knowledge, a lot of experience held by those at the front line, those in compliance, those in law enforcement, who have not necessarily had a voice for the last 20 years. And if we can find people who will listen to those voices and take on board what those people say, draw out that tacit knowledge from these people, I think our knowledge of the problem of dirty money, or of money laundering, of terrorist financing, can change very quick. But we need to listen to these people, because they are our bricks and mortar. They are undervalued, but they have so much to offer.
They are the unsung heroes. I mean, and that's something that was pronounced all throughout your book, that the tone of the tenor had a very much, it had a frontline street level vibe. It wasn't, I've served in multiple administrations and this is what I've learned about money laundering. It wasn't a top down, speaking to the proletariat type, or I'm this great scholar at Harvard Law. This is what my survey shows. You compared to a lot of the books I've read on this subject, you focus a great deal on the practical, which
Thank you very much.
Yeah, which I think readers will appreciate. It's a good read. I recommend it to our students and practitioners alike. The book is The War on Dirty Money, and it's published by Policy Press. Nicholas Gilmour and Tristram Hicks, thank you for taking the time to speak with us today.
Thank you very much. It was a pleasure.
Likewise.
Yeah, no problem.
And to our audience, thank you again for joining us. Until next time.